Thank you for joining us today for our Tools for Life virtual workshop, Budgeting in the COVID-19 Environment. My name is Tara Jensen, Program Manager for the Tools for Life Learning Center by Loudoun Habitat for Humanity. And today, Alex Figueroa is joining me to talk about how to budget in this current season and beyond. So thank you, Alex, for being here with us.
Thank you so much for having me.
Yeah, absolutely. So if we are just joining us, I just wanted to mention it again. We would love for you to participate in our chat. And if you have any questions for Alex as we go through this presentation, please enter them into the chat function. There's a little bubble on the bottom of your screen. Click that, your chat function will come up. We'd love to hear from you as we go through. So Alex, thank you again for being here. I'm gonna just go ahead and hand this over to you to get started.
Absolutely. Well, thank you so much, Tara. Thank you as always. And thank you to the Loudoun Habitat for Humanity for having us welcomed here in our Budgeting in the COVID-19 Environment. My name again is Alex Figueroa. I'm the Consumer Market Leader for Bank of America, handling Prince William to Fredericksburg counties. But my home is Loudoun County, so this is near and dear to me, and I love working with the Habitat for Humanity. So looking forward to sharing tips on how we budget, save, and just manage money during these times of COVID-19. So let's talk about what we are going to learn about today and jump right into it. What we'll learn today is how to manage a little bit of debt, right? That's very important, especially during this time. We want to manage our debt. Some banking basics so we can get back to knowing what's at our disposal and how we can manage our money, what an emergency fund should cover. Definitely want to make sure that we touch on this. It's a very vital piece just in our everyday living for general, and especially in this time in a COVID-19 environment. And then, of course, how to budget. So getting back to basics of creating that budget checklist and knowing what's important to us and sticking to that budget. Really look forward to sharing some tips and techniques with everyone today. We can go on to the next slide, Tara. So we'll talk about what we talked about first, which is managing debt. I like to start out with this piece because really no matter the situation that most of us are in, we're still gonna have some form of debt. And even if our incomes have changed or we've seen some unfortunate unemployment and furloughs during this COVID-19 time, debt is something that's still gonna be on our radar and quite frankly in our personal wallets. So we wanna make sure what to do and what not to do when it comes to our debt. That's the first part of even creating a budget, really managing our overall wallets in terms of money management. So the first thing, as you see on the screen here, is talking about what to do. You know, what to do is obviously we want to prioritize paying off our debt. When we go back and when we go forward here and we learn about how to create our budget and sticking to that plan of what our budget is, one of the priorities is going to be to pay off debt. We certainly want to pay that off to have even more residual income and savings income coming towards us. So obviously prioritizing that is a key step into creating a budget. We certainly still want to pay on time. Paying on time and affecting our credit score can greatly affect how we want to use money in the future. And so during this time, I highly encourage everyone to still obviously pay on time. And in crisis, especially those who have had that change of income and things that have prevented us from sticking to the normal budget we may have had pre-COVID, working with each of your lenders or your financial institutions to ensure that you consistently can pay on time. Most lenders and financial institutions are offering ways to extend payments and to allow some cushion so that way it doesn't affect your ability to pay on time. And then, of course, sticking to a spending plan. Very important. If we were going to create a plan, we're going to know what we want to spend and not spend throughout the day, the week, and the month. And we quite frankly want to stick to that. So what do we not want to do? Well, obviously just pay the bare minimum if we can help it. If we're not paying just the bare minimum, all of that extra goes towards principal, and it will go towards paying off that debt, which will allow us to have even more emergency savings. Don't forget about your accounts. As I stated earlier, I know post-COVID here, times have gotten tough, but we don't want to forget about the accounts that we may have when it comes to our debt obligations. Again, work with our financial institutions, work with your lenders, and see about extending those payments so you can stick to paying on time and not forget about it. And then, of course, during these days, we don't want to shop till we drop. And of course, that's changed post-COVID, right? We're not going to the mall per se, but I can tell you just from personal experience, online shopping has become easier than ever. And certain deals are out there and a lot of things are at our disposal to make it very easy to quote unquote shop till we drop. So just make sure we manage that. You don't want to fall into the trap of the easy click of a button and then we're going over our budget, something we don't want to do. You'll see in the corner there is, or to the side, I should say, you'll see there's a graph showing just exactly how making more than that minimum payment can help. And of course, you'll see there, if you're making the minimum payment of $100 to pay off $5,000 roughly, it's going to take 23 years. Excuse me, that's on close to $10,000, but it's going to take 23 years. Whereas making more than the monthly payment, even increasing it to $175, because it's going all towards principal and not just interest, it will take it to 3 years. So very eye-opening. So when we're creating our budget, it's something we want to think about towards prioritizing our debt. You can go to the next slide, Tara. There's some debt payment strategies here, and normally we would play a video, but during this virtual session, I can describe the two, and I'll give a very vague topic and just high-end topic of what this is. I encourage everyone at the end of this session to visit the Loudon Habitat for Humanity Loudon website, and they're going to have some links on here with our Better Money Habits, which is based off the Khan Academy, working with Harvard University. You'll see a link there, and they can go in depth on how these work. But just some basic repayment strategies. There's the snowball method, and it's versus the high rate method. The snowball method pays off that lowest balance first. So basically what you would do is you would take all of your obligations, normally credit cards here in this perspective, not so much your mortgage and car payment, but you would take all your credit cards and you would prioritize paying off the lowest balance first. And the way you do that is you would make minimum payments on every single payment, and then whatever money is left over in your budget to pay towards repaying your debt, you would put it all towards that lowest balance. It pays off those lower balances quicker. It helps for those of us, and I can attest to it myself. I use the snowball method to get out of debt. It encouraged me because I saw I was paying things off at a quicker pace. And but the drawback to that is you'll eventually pay more interest in the long run. But again, no method is better than the other. That is the snowball method. The high rate method is the same principle in terms of taking all of your credit card debt obligations and making the minimum payment on each. And whatever money you've budgeted to repay your debt, you want to take that extra funds and put it all towards the balance with the highest rate. And what this does, it's going to save you in the long run the most interest that you've paid to your financial institutions. The drawback to this is it might take a little longer to pay off particular credit cards, but in the long run, you save more money because you're paying off the highest rate. And again, I encourage everyone to visit the Loudoun County Habitat for Humanity website, and you can see the link here to go into more detail on these debt repayment strategies. So let's talk about banking basics. And the reason I like to include this in any type of budgeting workshop that we do is because let's talk about what the difference is. And a lot of us say, yeah, I know what they are. But just making sure that what the easy access has to each and what they both do for us is very important in terms of making sure that we're using the right accounts to create our budget. And of course, there's basic checking accounts and savings accounts. Checking accounts give you easy access to ATMs, mobile access. Technology's come a long way, and it just gives a lot of convenience. Comes with that debit card to take directly out of your checking account. And many even come with a checkbook. If you're old school like myself, when I started in banking, I was using a checkbook every single day. We still do that, but certainly we have the technology and tools at your disposal to help that as well. You could pay fees for not carrying the minimum balances, using other banks' ATMs, and of course, withdrawing more money than is available in your account. I usually start off with face-to-face every workshop that we do on budgeting with, well, class, I could really do it in one sentence, and that's don't spend more than you have. And that's the basics really for anything, but obviously that could come with fees if we were to do so. And then looking at savings accounts, they're designated for high long-term goals. if we're looking to build a vacation fund, if we're looking for that emergency savings, or anything per se, or children's education, no matter the scenario, it's going to give you an interest rate. Obviously, anything much more than a checking account. It does give you limited access to your funds, so you can't impulse buy and do that online shopping like I referenced earlier with a savings account. But it can be linked to your checking account so you can easily transfer funds as need be. You can pay fees in a savings account for not carrying the minimum balance, so make sure that you know the parameters there and make sure that you're in the account that's working for you and it truly is a savings account, not to be used as just a cushion for checking. And of course, excessive withdrawals. There are federal regulations. Every financial institution has to adhere to them for having too many withdrawals from a savings because, quite frankly, it's a savings account. If maximum withdrawals and many withdrawals are needed, then a checking account is really your best option. So let's talk about the different ways to pay. Again, very important in terms of knowing, okay, where do we start with our budget? How do the accounts work? How do I pay? Well, there's cash. You know, you always hear the saying, cash is king. It can help you avoid debt as you can only spend what you have. Of course, the cons there, if it's stolen, it's gone for good. So, you know, the days of putting money on your mattress is just not safe. Certainly every financial institution is FDIC or NCUA secured and your money is protected. There's of course debit. So the pros to that are payments come directly from the checking account and it's going to help you control that spending and avoid debt because it's only using the funds that you literally have. Of course, the cons are if you spend more than you have, you could be charged overdraft fees. You do not build credit, of course, with a debit card as well. So make sure you still manage your money. It's still very important. Then, of course, credit. It's a safe and easy way to build credit when used correctly. If we're not overspending, if we're not missing payments. And of course, it likely offers protection, fraud protection, I should say, which is great in today's day and age. We talk about the safety of our accounts, and especially in the environment we're in now, having that fraud protection is certainly a blessing. Of course, the cons are carrying a balance is going to result in interest charges, and you could hurt your credit history if you don't pay on time. So using a credit card effectively, using it for rewards, for example, and paying off your balance at the end of every month certainly is doing nothing but good for you. You get the fraud protection, you're not paying interest, and you're getting rewards back from your financial institution. So let's talk about what we need to start budgeting for. So really the meat and potatoes of what I want to talk about today. And the number one thing is emergencies. I always ask anybody when I do these sessions, what's the first thing you should pay when starting a budget? And the majority of answers I hear are my mortgage, my rent, my car, food, my kids, all very important. Nothing is more vital than the others there. They're all equally important. But I would challenge everybody that the first thing you should pay when creating a budget is yourself. And what that is for emergencies. So you avoid going into debt from unexpected expenses. You want to have that savings reserve built, especially in times like these. You know, I've helped many of clients now who unfortunately have been furloughed, have seen their income change, and getting them on an emergency savings plan certainly helps during these stressful times. So that way they're not going into debt and they're not using monies that they don't already have. So I challenge everyone when we're creating our budget, we'll see a worksheet here of how it can help us do that. The first thing we really want to prioritize and pay is ourselves. Again, the other thing we want to budget for that we talked about is paying down existing debt. Interest rate expenses will not go away without our spending power or savings. So making sure that we're prioritizing a budget to pay a little more than the monthly payment, even going back and doing some research on the two methods we learned about, the snowball and the high rate method, can help in terms of maximizing what's really available to us for budget. Short-term goals, so you can afford fun things. We're all human. At the end of the day, we should budget for a vacation, for a wedding, for a life event. These are very important things and it keeps us sane. Let's make sure that we're budgeting for that it's not coming as a surprise and we're strung out and now we have to figure out how am I going to make this time that I need in my life work for me when it comes to how it's going to be paid for. Of course, we want to budget for retirement to plan for our long-term financial security. I'd like to think that I'll be able to work at the pace I'm at forever, but I know that's unlikely. There will come a time in my life where I know I'm going to need to slow down, settle down, and I want to be able to make sure that I'm prepared for that. And so I encourage everyone when starting a budget, no matter your income, because it's based off percentages, It's not based off dollar amount. It's a percentage of whatever your income is. Let's make sure a percentage of it's going towards retirement so we have something that we can fall back on when it comes time for us to slow down and retire. And then, of course, there's education, because it can help you earn more, but it requires an investment, right? So many of us still want to be able to go to school. Many of us want to further that education for self-learning, or even to better ourselves when it comes time to switching careers or whatnot. You may want to budget for that education. So these are just things we want to think about. And of course, when we get into our worksheet, we're going to talk about everyday expenses like food, rent, our daycare, and etc. But these are just some basics of things that we really need to budget for that we don't always do. So let's talk about an emergency savings. So the emergency fund is going to provide us a safety net. It's going to help us cover unexpected expenses without having to take on debt or compromising our ability to buy and what we need day to day. So what are some important expenses to consider when we're building our emergency fund? Such as I said earlier, the housing expenses, right? Food, very important. We got to eat. Insurance, we want to make sure we're covered. Medical bills can be extremely high. Debt repayment, transportation. You know, are we driving? Do we have a car? Are we using the metro system? We still want to budget for those things. And of course, the personal expenses. We all want to see movies. We all maybe want to enjoy Netflix. There are things to make sure that we're budgeting for when it comes to personal expenses. And then kind of figuring out when it comes to emergency savings, we really want to look at what am I going to need from a 3-month standpoint? And then even further, what would I need from a 6 to 9 month standpoint? Pre-COVID, a lot of us weren't thinking about that. We may have like 30 days worth of reserves. But now with just the change of environment, really the change in most of our incomes, we have to start thinking, what's life going to be like 6, 9 months from now? Better to get ahead of it as soon as we can to try to create budgeting and to create that emergency savings to pay for these things if, God forbid, we're in that situation. So now it gets down to a checklist, you know, and however we want to do that checklist, you know, some of us can do it in our head. I know I can't. I physically write it down. There's so many apps available to you in your smartphones. There's reminders and notes. But either way, we should create a checklist. How to put that spending plan in place. So the first thing we need to do is we need to know our net income. You know, when I ask questions to many of our clients about applying for loans or things of that nature, we'll ask about income, and everybody's quick to talk about their gross. But again, gross income is not what you're putting in your pocket every single day. We need to know exactly what we're bringing home every day, week, month, however we get paid. It's very important. That's what we need to budget off of. And then after that, we need to make a plan. What is going to be important to you? Is that plan that we want to obviously start with our emergency savings? And then after that, is it my child's education? Is it getting my debt paid off? Is it going on my dream vacation? Make a plan. Start budgeting for it after we've done our emergency savings and we've handled our household items, so that way we can attain the goals that we have. Then, of course, we got to track our spending. If we're not looking at our bank statements and bank accounts via mobile, online, or through your checkbook, if you're old school, like myself, track that spending. It's important. One day of mistracking can throw everything off and really get us off of our checklist and our budget plan. So we have to be disciplined and know what we're spending each and every single day. And we need to check up on our progress. So month over month, see how we're doing. How is our emergency savings coming along? How much have we contributed to this month? And of course, our plans that we want to accomplish short-term or long-term, are we contributing to that? A lot of people ask me a lot of questions on how much should I put in emergency savings? And there is no right answer to that. The right answer, quite frankly, is based off whatever percentage of your paycheck you can contribute to from a lifestyle perspective, knowing what you may be able to cut back on and not necessarily need. That's what should be going to your emergency savings. So it is case by case, but we got to track it, make that plan, and know our net income. And then, of course, that leads right into what I was just talking about, adjusting our habits if needed. If we're going to stick to this plan and we know we need an emergency savings, whether it's $100 a month or $1,000 a month, whatever we know our income and budget can afford, we want to stick to it. And that may mean that we're not going to Starbucks every day. I use the Starbucks example, and Starbucks is great, but I can tell you right now, my wife and I were looking at how can we just find money? Because I always tell people, I challenge them, find money in your statement. It's there. And what I mean by that are look at the things that you're wanting every day. Are you going out to eat every day? Are you getting that cup of coffee every day? Are you using the most high-end cable and not even watching it anymore because you just stream Netflix? Find that money and adjust those habits. My personal experience, again, we got our cup of coffee, both of us, every single day. Came out to a minimum of 10, at sometimes $20, $25 a day. We easily, just by cutting that out, discovered that we had an extra $300+ in our account, just based off limiting coffee runs every day. And that, of course, went to paying a bill. So I challenge you to find that money and adjust those habits if needed. So that way we can pay ourselves back, which is the highest priority. So what we've attached here, and again, I encourage everyone, if I haven't already mentioned it, and I know I have, to go to the Loudoun Habitat for Humanity website, and you'll be able to find these better money habits, not only just this, this spreadsheet that we're going over, but the whole deck itself. But I encourage everyone, if you don't have a mobile phone, you don't already have a way to track your spending, use this basic generic spending plan we have. It breaks it down between your mortgage, your rent, your car payment, what you're going to need to pay for insurance, your utilities, cell phone, everything. So that way you can map out all that you have when it comes to your expenses, know how much is going toward what, and then creating it based off your net income, what your budget will be. Try to find those extra dollars and then be able to set your priorities to paying yourself for an emergency savings, and then whatever short-term and long-term goals you have after that. Highly encourage this. It's a way that got me in track to create my budget. I still use it in terms of just creating that spreadsheet and knowing what I'm spending every month. But I highly recommend everyone on here to go to the Better Money Habits site, and you can get there through the Loudoun Habitat for Humanity site, and print out this sheet and track all your expenses. It really is the first step to creating that budget. So what are some key takeaways? Because we gave a very high-end level here of just creating that budget and kind of getting back to basics of not spending more than we can afford, paying ourselves first, prioritizing paying off debt. These are the key takeaways that I wanted us to just have from viewing this seminar. So we want to be responsible with credit, of course, work to repay any debt, learn and apply the banking basics that are at disposal, and then, of course, budget. I can't stress enough to create that plan, physically write it down, know exactly where every single one of your dollars is going towards every month, and then track your spending daily. Again, my challenge is to find that money, that extra money that is lying from the wants that we all have in our statements every month, and eliminating some of those to help prioritize our long-term, short-term, and of course that emergency savings goal. These are the key takeaways that I hope we all got from today. I think with that, Tara, that is the end of the slide portion that we have. So I'll turn it back to you at this time.
Absolutely, Alex, thank you so much. There was so much valuable information there. And I say this every time that I see you, I always learn something new. So I always appreciate what you bring to my own financial plan. I do have some questions. Again, so if you do have questions, put them in the chat function and we can get to them. But I do have some that came in. So we'll just get started with those. Alex, what percentage should your housing costs be within your budget? Like, what's that ideal housing percentage?
You know what, again, it's what's going to be best for your situation. I hate telling people exactly, you know, you can't get that house or you got to get this house. But a very generic figure that I like to use is when it comes to monthly payment, because everybody's situation is different. You may be able to have some more money down. You may not have any money down. But when it comes to monthly payment, if you're going to have one of those with a house, you really don't want it to be any more than 25, 30% of your net income. And the reason for that is because once you're getting above that 25, close to 30% threshold, you're really going to start having trouble building that emergency savings and having those extra funds that you're going to need. So that's really what I try to guide everyone towards, staying really ideally in that 25% role. If lower, that's even better, to be quite frank. But when it comes to how much house, that's going to depend situation to situation. Monthly payment, I try to stick to the 25% or under.
Great, thank you. I have another question for you. If you have really high medical bills, how do you budget that in?
Great question. When it comes to medical bills, obviously if you're not paying them and they've gone to collections, that's gonna obviously hurt your credit report. So you definitely wanna prioritize at that point. But if it hasn't gotten to that point, so you just have medical bills per se, that will have to go towards emergency savings at times, and you may have to rebudget. It's a living document. So it's not something that, oh, I wrote this 2 years ago and this is what it's always going to stick to. Life changes. So if we had a budget and we knew that we were dedicating certain amount of dollars to vacation, certain amount of dollars to, a personal expense that I wanted to accomplish, that might have to start going on the back burner to help pay off the medical bills I have and make sure that we're redoing our budget. So the best thing I can say to that question is it's a living document when it comes to our budget. It's always changing based on our life events, and we may need to reprioritize at that time.
Wow, that's great advice. I think that we can tend to forget that. We get to our budget and we're not flexible anymore. And so
I can't pay this medical bill now because it's cutting into my dream vacation.
Right.
Life hits us sometimes, and we may have to change our priorities.
Absolutely. Sacrifices, right?
Absolutely.
So the last question that I see here is, should you take out of your 401k to pay down debts?
Ideally, the answer is no there. And the reason for that is there's certain factors that you can take out 401k for, such as I think leave medicals sometimes, and if you're buying a new house. But usually the circumstances for taking out of your 401k is you're going to pay a hefty amount of fees and penalties, much more than just the tax penalties and the normal penalties that you will pay to do so. You're going to have early withdrawal. It could be upwards of, say, 40 to 50% sometimes of the 401k. And that's high. I'm not saying that's everybody, but it could be as high as that. So is it really worth paying 40% per se of the funds that you've worked hard to save for to pay that back? It's not a structured approach to it. I would recommend that if you really have debt, and I'm talking real debt, so thousands upon tens of thousands of dollars, go back and watch those videos on the snowball method and the high rate method. If you can stick to that plan, and it may take 5, 6, 7 years. My personal experience, it took me over 5 years to get out of debt. And if you stick to it, it can happen. That 401k should be an absolute last resort. We've worked too hard for those funds. Why have anybody take any money away from us that we've contributed to?
Great, thank you. I think that's a common misconception there. So I think that's good to clear it up.
We don't know until it's too late. You get that penalty and you see it like, whoa, what's this? You used 401k money.
Yeah, definitely. Well, I think that's all we have here today as far as questions go. Did you have any major highlights? I know we had a takeaway screen, but if there's any last thoughts you have and tips for anybody in budgeting?
Alex talking, I always say, hey, listen, don't buy what you can't afford, but there can be times where if we're budgeting properly, it may take us a couple weeks, may take us a couple months, but if you stick to that plan, not only will you get ultimately what you're shooting for when it comes to short-term and long-term goals, as long as we're realistic. At the end of the day, I know I'm not going to buy a $10 million house. If we stay realistic with those, you'll feel much more rewarded knowing that you've budgeted, not had to go in debt, not had to use money that wasn't yours. And even though it may take a little longer to get, that reward will offset any other feeling that you have. And I tell everyone now, just post-COVID, don't get frustrated. Most of us are in the same boat and the same predicament. As we stated earlier, budgeting is a living, breathing document that could change daily. So just going back to reprioritize what's most important to you and to be prepared for the future is what's most important.
Oh, that's great. Thank you so much for that advice. So I think we're wrapping up, and Alex, it's always such a great pleasure to have you here with us. Your wealth of knowledge in this department is so useful. And so we hope to have you back again and sharing more tips. But for today, thank you so much for your time. We really appreciate it.
No, thank you guys. I really appreciate being here, and absolutely.
Absolutely. And on behalf of the Tools for Life workshop series by Loudoun Habitat for Humanity, thank you for being here with us. Our workshops are free and here as tools to make your life richer and more successful. Visit loudounhabitat.org. As Alex had mentioned earlier, for our past workshops and other useful resources that we have, and we'll definitely link some of these websites and even the spending plan into some of those blogs. So check those out. We invite you here next week, Thursday at 2 with Amy Taylor with Finished for Good for easy furniture transformations, update or repurpose.